have a great relationship with China. Hopefully we'll make a deal.
All right, the president being low-key about these rumors that were swirling that when he meets with Xi Jinping next week in, where are they going? Argentina, I think, for the G20, that they might have the makings of a deal or at least a truce. That reversed what had been a 200-point slide yesterday, turning into a 200-point gain. Just the hint of that reinforced today, or hinted at today by the president, lifted stocks yet again. Let's go to Market Watch's Jonas Max Ferris, Dan Geltrude. Dan, it is a reminder, as if we needed it, that the prospects for a deal with China are very much market-moving events, right?
Absolutely. It's really important for us to get a deal. Look, based upon Jamie Dimon's comments today about 2019 is going to be the year for growth.
You're talking to J.P. Morgan Chase head, in whose company Warren Buffett invested $4 billion.
Right. And I think that's what he's indicating there is that if there's going to be global growth, right, there has to be a deal between the United States and China. I think that's where we're going to end up going. They have to make a deal. And Trump has 2020 on his mind, too. He's got to make a deal if he's going to continue to rely on the economy to be his calling card for re-election.
What do you think, Jones?
I don't think he minds dragging out the deal part of this a long time. It could go for months and months. I think.
Do you think the midterms change his perspective or no?
I don't think he was playing this for the midterms like that. I just think he likes being in this deal mode and he wants to get more out of China. And I do think he has a lot of control with it over like 200-point swings with the market, which you've seen a lot of. I just don't think you're going to, it's not a 2,000-point swing event. I think it's actually it's more downside for foreign markets than ours and maybe a little more upside for our market than theirs.
So let's say we score a deal or even the construct of a deal. How would the market do with that?
I think it has more upside than downside, this deal. I think ultimately interest rates and tech stocks are what's the drivers that can do 1,000-point moves. But I definitely think if he pulls something off next week and it looks even slightly better in our favor, it could be a few hundred points. I just don't think it's like super big news.
You know what's interesting? All the businesses and sectors that would benefit, we found not only those who are multinationals and have exposure abroad, do business, China, Boeing, Caterpillar, et cetera, but chip makers, everyone else, even food, Hormel, it cut a broad swath. If we get something that looks like we're on the way to a deal, what does the market do with that?
Well, I agree with Jonas on that. I think that you'll have upside. It's not going to be super upside. And you want to know why, Neil? It seems that the market has a very short attention span. It seems that the market is chasing the shiny objects. Right. We get some news on Brexit, not so positive, bang, market's down. President makes a comment. President makes a comment about China. Market swings up. So it's a little bit disconcerting that the market would have a short attention span on major issues.
Well, that's a very good point. Jonas, one other thing I think of, too, is, and this is where the midterms could make a difference. We've already seen, Congressman Pascal in New Jersey, who's going to have a very key role on trade within the House Ways and Means Committee, the subcommittee on that, who's already said, that deal you scored with Mexico and Canada, it has to go by me, and I'm not a fan. And I'm wondering how that plays into the whole China deal stuff.
Neil, with all these deals, they might get pinched as to what they want the deal to be. And there's also a little bit of a risk of it. This sounds really crazy, but it going too well. There's been almost too much winning by America. I know it sounds nuts because Trump's always like, we're going to win. You get sick of winning. But the bottom line is our interest rates started to get too high. Our dollar got too strong, and that's one of the big hurt on those stocks you were just showing. That's as much that as it would be any tariff problems. And if we somehow come out the winner and everybody else loses, it's going to be too much money coming into this country, and it's going to be hard for these exporters to sell just on dollar problems. So you want to have a trade with this country, but you don't want to beat them down so much that you're the only victor either, because that's not great for anybody in some ways. We want everybody to have a fair trade situation.
Well, saving face at the end is
the tricky part, Neil, with China is this. The real sticking point is the theft of intellectual property and technology. How do we get around allowing China to save face, essentially not admit they're doing it, and still make a deal and have something in the dirt, right? And still have something in place to stop them from doing it going forward? That, to me, is where it gets tricky.
Understood. Dan and Jonas, thank you very, very much. Always have a good read on that.